Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 5th of August, Bull versus Bear webinar. Steve Miley here on the Call for Trade. Well, Bull versus Bear, more like Bear versus Bear, right? It's going to be an interesting day today as we kick off and go into the open, into the cash market open, given that we've got a sea of red globally. Futures obviously significantly lower already today. So it's going to be an interesting day today. We'll talk through it now. So all of this really being driven by the employment report from Friday. So the unemployment rate moving up significantly from 4.1%. Expectation is supposed to be unchanged from previous. You can see in here 4.1, came in at 4.3%. The non-farm payroll data, the added jobs, 176,000 expected, having the previous been 179, only 114 jobs added. So two very negative headline numbers showing a contraction, showing not so much a contraction, a loosening of the jobs market, not a contraction, a loosening of the jobs market, higher unemployment rate in here, and real concerns now that the Fed have made a mistake, a real concern that the Fed have been too slow to cut rates, that we could be heading for a hard landing being a recession. That's two consecutive quarters of a negative growth. So markets have gone on high alert to that. The saying in the markets is if the US market sneeze, the US economy sneezes. Sorry, the US economy sneezes, and the world catches a cold. And we've certainly seen that in Asia, with Asia having a rout this morning. The Nikkei down, double digits down, nearly 13-14% at one point. Closed, we'll come to it shortly, but closed at double digits down. The Nasdaq set for one of its worst opening this morning for some time. We'll go through some of the numbers shortly, and all being driven by this. And then, I mean, the most shocking numbers really from my side are the way the market, the CME Fed Watch tool and the bond market is now pricing in a Fed that's going to have to come to the rescue. Both not necessarily for the stock market rescue. It's not the Fed's job is not to prop the stock market up, but obviously it doesn't want to see a big sell-off in the stock market. That's not ideal because that erodes wealth, it erodes confidence in companies if the stock market falls. But more so, it's just those numbers, right? The numbers we're looking at here, the unemployment rate and the non-farm payroll numbers. They're just saying that the economy is significantly slowing down. The labour market's worse off, and that can have a significant effect onto the economy. So that's looking back at those numbers. In here, let's look through 5 things to start your day in my weekly. So the the macro matters and the weekly recap in here. So so we're leaning off global stocks sink on US recession fears. That's what drove it. The US jobs data sending a hard landing warning. Fed now very much, even before this, Fed were pointing to a September cut. And the CME Fed Watch tool now, we'll go through it. It's really, really a leap from where we were looking only on Thursday of last week, even a post-Fed. I think what's going to be super, super important now, guys, is to keep an eye. Data is obviously always important, but what the Fed say now, the Fed are probably going to shift to quite dovish because obviously the markets have got very, very spooked about this. I think, and the Fed, the expectation from what the Fed are going to deliver is now very, very high. And the Fed are telling us, they're still like, we should probably cut in September. Well, the market wants a lot more of that, and we'll look at that when we come to the Fed Watch tool. Obviously, we had mixed earnings last week, mostly negative from the Magnificent Seven. Previously, the other two of the Magnificent Seven, previously had Tesla and Alphabet, right? But if we even look at these, nothing was particularly great about. So Microsoft was half decent. Amazon was very poor. Apple was decent, but not great. Actually, Microsoft wasn't that great. Amazon wasn't that great. Apple was okay. Meta was good. So, of like really, you'd argue of the six of the Magnificent Seven have reported. You'd argue only Meta delivered a decent return and a decent outcome on their stock price. We've got Nvidia doesn't come till for another few weeks in here now. So all of this has been, this is just added on, but really it was just to add in. Bank of England did cut rates last week in here to join the ECB. Have obviously already cut rate. The Swiss National Bank cut rates all the way back in, I think it was March. The SNB. So the US have as in market speak, the US Federal Reserve is getting behind the curve. Okay, and we'll come to see that when we get to the CME Fed Watch tool. Looking into the day, we do have some important data today. So you've actually had a load in green in here, but it hasn't stopped European stock markets going lower. The PMI data. So we've had the HCOB/S&P Global PMI data for services and composite. Remember, we had the manufacturing last week. We get that also this afternoon from the US. That's at 9:45, but that gets trumped by the more important number, which is the ISM data, which we get at 10 o'clock Eastern. The ISM non-manufacturing, which is services number. So we're going to be watching out for that at 10 o'clock today. We also get daily speaking today, FOMC member daily. I think Fed speakers are going to be so important because the Fed really, if they are going to become more dovish, they're going to have to want to start sending that message to the markets, okay? And we're going to do a quick dip into the earnings for the week, but really we're past, six of the Magnificent Seven are gone. We're past the peak of the earnings reports in here. We do have a few bits in here, but nothing I'm going to really concentrate on going forward. Actually, just as a point of note, Wednesday will be I'm not actually sure I'm going to do both the Tuesday and Wednesday this week, but Wednesday will be my last webinar for about 2.5 weeks. So Duncan will be covering, but I don't think he'll be concentrating too much in here. The one you will need to watch out for is Nvidia going forward. That's some ways out, but if you look into this week, we've got nothing really. We've got Caterpillar sometimes is significant. It's a reflection of the US construction industry. Disney might be interesting because that's a kind of a reflection of, particularly with the streaming service, a reflection of the consumer. So let's see how those numbers go, but I'm not going to really concentrate on that. We won't be concentrating on the earnings report. Maybe we'll circle back, or I'll make sure to see if Duncan will circle back when we get to Nvidia. So 5 things to start your day. Nothing good. Stock slump. Global stock markets falling in here. Nasdaq set for its biggest opening drop in more than 4 years. Japanese equity markets slid more than 20% from record highs, but a massive move lower today in here. European stocks falling. The yen surging higher by 3%. Remember, the yen is a safe haven currency. So global bonds erased their losses for the year. So global bonds in here rallying, pushing significantly higher in price to lower yields in here. And look, meanwhile, traders ramped up bets the Federal will step up with an emergency interest rate cut, putting us at 60% for a quarter point reduction in 1 week. Okay, so this is happening as well. So we don't really see that in the Fed Watch tool because it's only showing. But if we look at the interest rate curve, if we look at the futures market, they're actually pricing in that we're going to get a rate cut in within a week, a 60% chance that they step in within a week because of that data. Okay, so don't do it. That's an emergency one. That will be outside of the scheduled the next meeting. Okay, that's not the next meeting. That's before the next meeting. Okay, emergency interest rate. I really do not see that happening in here. Because it will send a very negative message from the Fed that they're panicking. So I don't see that happening, but I think we will get a lot of talk from the Fed that, okay, the data's worrying now. The data is of concern. The slowdown, that jobs data is of a concern, and they are going to act to stop that. Okay, and we'll see in the Fed Watch tool shortly. What's going. Mega cap technology stocks bore the brunt of it. So Nvidia in overnight trading here down 7%, Apple down 8%. That's his after obviously bad days already posted back on Friday in here. Elsewhere, oil extended a slide, so oil continuing lower in here, and that's despite the fact that possible attacks. Israel is bracing itself from attacks from Iran. So this, everything that's going on in the Middle East should be pushing the oil price higher, but oil going lower in here because of concerns about global growth. Global growth thoughts, oil price, less demand for oil, right? Cryptocurrencies also pushing significantly lower in here. Anyway, and then Mars, we're not going to go on and look at Mars. That's not really that interesting. So, I mean, these are all that's on. I'm not going to go through these in any detail, but look, global sell-off intensifies. US stocks futures tumble. Nasdaq taking the biggest hit, no surprise. VIX, the volatility index, hitting a 4-year high in here. Heavily trading at circuit breakers triggered on Asian stock markets this morning. Losses cascade. Traders look to Fed for rescue. Japanese stock index drops 12%. Historic sell-off. Nasdaq futures came close to triggering a circuit breaker. So we're close to circuit breakers, guys. Watching out for circuit breakers today. So if the market moves so much, they close the market. Okay, so you have to watch out for that as well in here going into today. Global bonds rally accelerates as market bets on big rate cuts. Swaps imply at least 5 Fed quarter points cuts this year. So the market now, this is what the CME Fed Watch is pricing in now, is pricing in 125 basis points. The market's pricing in 50, 50, 25, 50 by September, and then 50 November, 25 at the end of the year. Dovish repricing follows weaker than expected jobs data. We know that. Same from Reuters. US yields sliding lower as traders bet on big Fed rate cut after the week's data. And live global market route, Fed looks to be materially behind the curve. That's when the market is getting ahead of the Fed, okay? And the Fed is definitely behind the curve now, way behind the curve. And so that's why I expect this jawboning. That's why I expect them to come out and start talking up. But we expect a 50 basis points cut at the September meeting. I don't see this emergency cut coming personally. Stock indices plunged, Nikkei down 13%, European shares at 6 months lows. In here, US futures tumble as recession fears grip investors. And if we go and look at the overnights in here, you'll see the numbers are kind of shocking in here. So Nikkei down 12 point. That's basically a mini crash, 12.4% lower today on the Nikkei. European stocks not bearing as big a brunt in here, but still over nearly around 2.5% across the UK FTSE, German DAX, and the CAC 40 around 2 to 2.5% down in here this morning. And US stock index, you can see that the Nasdaq is opening up 4% down on the future, 1.95% down on the Dow, 2.83% down on the S&P 500. And here's that Fed Watch tool in here. Look at this. This is incredible. So, there's no column in here for a 25 basis point cut. The current rate is 525 to 550. This column here is 475 to 500. So the market is basically completely pricing in a 50 basis point, a 0.5% rate cut at the next meeting. Okay, there's no column for only 25. If we go to November, the largest likelihood here, 79 plus percent, because you've got this 2% over here. So we're at basically 81% chance. So we get another 50. This is 425 to 500 with the current target rate, 525 to 550. So that's 100 basis points. That's a whole percent by November. 50-50, the market is pricing in by November. And then December, in here, there's the most likelihood, the 60.6 scenario. In here, this column here, so that's another 25. But there's almost a chance in here that's over here. There's 27% chance we get another 50. Okay, so the market's pricing in basically, this is the most likely by year end, 125 basis points. That's 5. Well, it's not actually 5 rate cuts. They won't cut rates 5 times. It'll be 50, 50, 25 is what the market is pricing in. Okay, 50, 50, 25. So, the market, the Fed definitely way behind the curve. The Fed are not even launched yet. They're talking about being careful. They're talking about being slow. That's what they've been saying. That's what the last minute's saying. Yes, we're ready to go. They basically told us they're ready to go, but they're still waiting on the data. Now the market is completely demanding. And if the Fed don't start shifting towards that, the market's fear is going to continue. What they want to hear from the Fed is, we're ready to go and we're going to go big. That's what they want to hear. If we get that, we could easily see a turnaround, and there's going to be a longer term buying opportunity here if you're a longer term investor. But right now, there's panic, right? Because basically the data's falling over. That we're going towards a potential recession. Obviously the jobs data is the concern there. There's concerns around a hard landing, and as far as we know, because we haven't heard from the Fed since last Wednesday. As far as we know from the Fed, they're still relatively cautious, right? But the market is pricing in, well, the Fed, you better be more aggressive, okay? You better be more dovish. Otherwise, we're going to stay in fear mode. But if the Fed start to deliver, that's why I'm looking for this jawboning. That's why we're looking for this change in tone from the Fed. All the data is worrying now. All the data is pointing towards recession. That's what we want to hear from the Fed. We are going to need to, be more aggressive with our outlook on future interest rates. If they don't deliver that, if they still keep saying this cautious tone, if they start keep mentioning, or we have to, if the hawks in the Fed keep reiterating, well, we've got to be careful about inflation. If we hear that, stocks are going to continue lower. Okay. Let's see where we are on bonds. Look, so bonds plunged lower in yield on Friday and then lower again. But look what they've done today. They've already had a rebound in bond yields. Okay, so that's bonds going up in price, down in yield. We had that plunge lower. They were always selling off. We spoke about this. They already sold off last week through the Fed anyway. But then Friday's data saw, boom, big Marabuzo candlestick. This is bond bullish. Remember, bullish on price and negative lower yields is bullish on price. And we'll come to the chart shortly. But if we go, it's jumped. If we go to today, look, we've actually rebounded. We've turned a little bit of a corner already today. Remember, this analysis in here was done over the weekend, so these markets have moved even further now. So bond prices are even higher in here. So you've had this surge high. Look at in bond prices. This is the bullish moves we've had on 30 years, right the way across the yield curve, obviously 30, 10 year, and even more so on the short end, obviously, because that's where we're expecting the Fed to become more aggressive. It affects the short end more. There's the 2 year. But if we look at the indices, they still look negative, and then obviously we've plunged through loads of this. We're much deeper in here now, and we're looking for support levels. My only thing in here, guys, is I do think that you can't. It's going to be too easy in here to play it from the bear side today, right? Look, so here's still nearish the lows, but watch those bond markets are starting to rebound in here. And any kind of indication that this might be getting to be over, value buyers could easily come in. Now, I'm not saying they are going to come in, right? Look at the NASDAQ already. Actually, look, it's come right off this level here, almost to the tick, right? Where's the low there? 17,338.75. We're already off that low. 17,351 was the low. 338.75 here, right? So it's held at this important support in here, this low from back in April. It's held at that low in here, and it's already rebounded today. That might be it. Okay, this could be the signal that's it. We could, and if we get anything from the Fed, anything slightly, and daily's going to be important today, right? What time was daily? Oh, that's from daily at 5 o'clock, 1700 Eastern time, right? That could be important, right? And every Fed speaker we get. Let me just go to the see if there's any others, because sometimes that calendar, Fed. That's the blackout period. Let's just do Fed speakers. Sorry, guys. Let's just see if there's anyone else speaking today. You know what? Let me go back to 5 things to start your day, because sometimes they put that in the down here. No, there's nothing in there. No, there's nothing in there. Let me just have a look on that the Fed calendar itself. What date we had? The 5th. 1st, 2nd, 3rd, 5th. Here we go in here. There's nothing in there, right? No, not seeing anything. Sometimes this calendar's not that great anyway. I think this is the previous ones. These are the archive speeches. This is looking backwards to July. No, nothing in there. Okay, guys. As bearish as everything is, this is the thing you've got to watch in here. This NASDAQ bounce. And the fact, if we go back to the bond markets, as we go to the bond market, up here, look, the market's come off its high, okay, on the bond side, okay. If this starts trailing back down again, and the NASDAQ in here, if we go back to the NASDAQ on the 30-minute, look, the Nasdaq looks like it's trying to base. If we can clear back above that peak, you've got a very accelerated downtrend line here. If you can clear above the overnight peak, 17,990. If we can hit 18,000 again in here on the Nasdaq, we could see buyers coming flooding in on the cash market open, right? It could be real money, long-term buyers come flooding in. So don't be going to this being all bearish. Remember, right? Remember, guys, we're already down like 4.25% on the Nasdaq and 2. But that's a massive day already, right? You're pushing capacity limits. But saying that, look at the Nikkei, it's at 12.5%. But it's a tricky one, but don't come into this immediately all bared up, right? Yes, we've had bear warnings flashing everywhere, but it'd be too easy to get sucked into selling rebounds where the risk could be this is the bottom's already going in, because we're a long way down from the highs already. Yeah. All right, guys, I'm going to wrap it up there. Be careful out there today. It's going to be an interesting one. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you. I'm not sure I'm going to be back tomorrow on Wednesday. Duncan will certainly be taking over from Thursday, but I'm sure I'll touch base with you guys before I go off on vacation. All right, guys, take care. Stay safe. Bye.